What the? News reports claim President Trump has been hiding his tax returns out of fear that he will end up with a massive tax bill, possible fraud penalties, fines, and even possible criminal charges for tax fraud. After reading through these headlines, you must be thinking,
he's a crook, charge him and get him out of office.
Okay, hold on there, Skippy. Let's remove the politics and partisanship from the narrative and actually review the facts of the case and see how billionaires like Trump and many others from both the political right and political left use the tax law to their advantage to pay little to no taxes every year. How you can do the same, all this and more in today's special video. Hello and welcome to the Stephen Carlson Show. I'm Stephen Carlson. I'm a tech entrepreneur, real estate investor, author, YouTuber, and volunteer paramedic. After reports and rumors came out about President Trump's taxes, multiple news sources immediately jumped on this story. Michael Cohen, President Trump's former personal attorney, says the president's biggest fear is possible tax fraud charges and a massive tax bill. Speaking to Yahoo News on Monday, Cohen, a disbarred former attorney who is convicted of tax evasion himself, addressed a New York Times report that pointed out impossible massive losses in Trump's business, which meant that he paid little to no taxes for decades. The paper also says he faces looming debts of up to $421 million. His biggest fear is he will end up with a massive tax bill, fraud penalties, fines, and even possible tax fraud charges, said Cohen. Cohen speculated that the revelations could be Trump's unraveling. Donald Trump's financial records are the Rosetta Stone for understanding his depth of corruption and crimes, Cohen said. The more that it is unraveled, the more he will unravel, and that is the reason he fought so hard to keep it under wraps, Cohen added. It's very important to note here that Trump has not been charged with any crimes by any prosecutor, and right now this is just speculation. Possibly true, possibly not, we just do not know. Cohen has long claimed that Trump's reason for breaking with the decades-old precedent by refusing to release his tax returns was proof that it contained evidence of financial crimes. The Times alleges details of how Trump sought to write off $70,000 in hairstyling bills and property maintenance as business expenses as he paid his daughter Ivanka Trump large consulting fees. It also claims that if Trump loses a battle with the IRS over a tax rebate, he could be forced to pay federal government over $100 million. Wow. Whew. Okay. Now, honestly, I am so sick of these party politics, from the left and from the right. Sadly, our country has devolved down to other guy evil just because they have different political ideologies. Whatever happened to looking at the facts of a situation and evaluating them not based upon the political team the person is on? Now, if you agree with me, you should check out my book, America Hijacked, where I cover how both parties, the Republicans and the Democrats, have been, over the years, lying, cheating, and stealing from the American people. The link is down in the description, and by purchasing it from Amazon, you help to support me and this channel. Something I appreciate. Thanks. While we do not know 100% of the facts, which neither do the talking heads at CNN, MSNBC, or Fox News, all we can do is speculate based upon the knowledge of how the tax system favors people that kind of play by a specific set of rules. Yes, in most cases, these are the rich and powerful people that have learned the rules of how the tax system works, and they use it to their advantage. But with a little background, you can learn these tricks as well, and you can do the same for yourself. Now, honestly, are the tax laws fair? No. But it's how the system works, and you can either complain about it or learn the rules of the game and benefit from yourself. How exactly is it possible that Trump supposedly paid no income taxes for 10 out of the past 15 years? Well, to the average person, they think that either he's lying on his taxes or he must be losing money on his business deals. But no, that's not how taxes work. The sad fact is the media knows the headlines will cause the average person to draw the wrong conclusion in their mind. See, unfortunately, the average person just does not understand how business tax deductions work and how amazingly favorable taxes are for real estate owners. Now, I don't blame the people for not knowing. These are things that are never taught to you in school. They are purposely kept secret, because if everyone knew this, they would all be rich with these insider secrets. Now, in all transparency, I did read the New York Times article, and some of the allegations, if true, they can be very serious. And I'm not here to make any excuses or defend the president, nor am I here to badmouth him. The only goal that I have here is to explain how at least one tax mitigation strategy that he probably uses, and plenty of other wealthy people use, and how you can use the same for yourself. Remember, this is a finance channel, not a channel about politics. Now let me break this down with you on how some of these tax benefits work with a quick example. But before I get to that, a quick reminder. Remember those lawyers I have chained up in my basement? Well, they get a little bit rowdy whenever I make videos. And the only way to quiet them down is to give a quick little disclaimer. I'm not a lawyer, I'm not a CPA, or anything like that. I do not have any paper hanging up on the wall behind me. I'm just some random dude on the internet that has dogs right down here that constantly walk in and out of the camera view. You should definitely consult with your own CPA or lawyer. I ain't one of them. Okay, now, first we need to cover the basics of how business deductions work.
Lemonade like little kids. So on our first day, we made $100 selling our awesome lemonade, for example. But we had to spend $20 for our lemons, $10 for our cups, and let's say $20 on other ingredients and supplies we needed to make the lemonades in the first place. So in total, we spent $50 to make $100 in revenue. So for every dollar we spent, we made $2. Now in tax law, we call that $50 as a qualifying business expenses, which we can deduct it from our total income we generated. So instead of paying taxes on $100, we only have to pay taxes on the $50 we actually made. But let's say we made $100, but we spent $100 on supplies, lemons, and we have to pay an employee that runs the stand, which means we pay zero taxes because all of our income was spent on getting the business running.
Of course, most of you probably already knew the basics of business tax write-offs. But what most people do not fully understand is just how amazing real estate tax deductions can work. And this brings us to depreciation, which is basically just a fancy term of saying the IRS understands that over the years, buildings begin to show a little bit of wear and tear, and they're going to require upkeep and maintenance. Now, for example, let's say that you purchase a fourplex multifamily building for $500,000. You put down 25% when you buy it, and you rent each of these units out for $750 per month. Now, honestly, don't get worked up on the exact numbers I use in the example. The key is just to understand the concepts that I'm going to talk about. Now, with these numbers, that means you're bringing in $3,000 per month in rental income. Now, of course, this is income. You have to pay taxes on this income. But don't worry, we'll get to that in a few minutes. Now let's calculate your standard deductions. In this example, let's say that your property taxes are $500 per month, your insurance is $50 per month, and because you wanted passive income, not a day job, you hired a property manager for $200 per month. Additionally, you spend another $200 on building maintenance, which might be landscaping, bug treatment, handyman services, etc. Okay, so far, these are basically the same as normal business write-offs. But here's where real estate investments really start to pay off, and that's with depreciation. First, we need to go back and start with the acquisition price of the property, which we already know is $500,000. Let's say that you had maybe $2,000 in closing costs that you couldn't write off. Honestly, it doesn't matter what the number is here. And when you purchased the property, you put another $30,000 into maybe some minor renovations to the units. Now, I know I'm tossing out a lot of numbers, but remember, you really don't need to follow the math here per se, just the concepts. Your CPA will do all of the math for you. Now to recap, you now have $532,000 invested into this property. And before you come up with your final depreciation value that you get to write off, you need to subtract the cost of the land. Now, I'm not going to bore you with all the details, but the IRS does not count the physical land in their calculations, only the structure. Now, every CPA is slightly different, but many of them subtract 30% from the cost of the property. And so in this case, we're going to say $150,000 is the cost of the land. We now have a total of $382,000. And the IRS allows you to write this off over 27 and a half years for residential properties. It's slightly different for commercial. We won't get to that right now. So you're going to take that $382,000 and divide that by 27.5, which gives us an annual write-off of $13,890. But since we're calculating this monthly, we're going to divide that by 12 and get $1,157. Now, just put that aside for a minute. Remember the taxes, management fees, and a few other expenses that we mentioned a few minutes ago? Well, we're going to take the number plus the $1,157 in depreciation, and we're going to add that together. The best part of that depreciation is it's a paper loss, meaning you really didn't lose that money. It's just kind of how the IRS calculates things. There's many reasons for it. I'm just not going to bore you with it at the moment. You can kind of think of this as an extra benefit for owning real estate. But really don't worry if you're getting confused. I'm going to summarize this all in a few minutes, so just stick with me. We're not finished yet. There's still one more thing that you can deduct, and that's the interest you paid on your mortgage, which in this case is approximately $1,484 you paid in interest. Now, if we add up all of our deductions, you will see that you have a tax deduction of $3,591 each month. Whoa, wait a second here. You only collect $3,000 in rent per month. Exactly. This is why investing in real estate is so profitable. In this example, you have a taxable loss of $591 per month. Even though this property is technically cash flowing at maybe $100 per month putting into your pocket, you can write off $7,092 each year in loss. Now, of course, there are limits per year, but in summary, you can usually carry over these losses to the next year and to the next year. You definitely need to check with your CPA. Now, I suspect this is precisely how Trump pays no income taxes per year, which is why he has refused to share his tax returns with people. It's not because he necessarily did anything wrong. It is, honestly, instead, because he knows the facts that the average American listening to the news media will only hear the headlines of Trump lost X millions of dollars, he's a failure, and they will not understand the nuances of how real estate depreciation works. But I know you're smarter than that, and you can put politics aside and you understand these facts. And because I know you're smart, you will also want to go grab your 2 free stocks from Webull when they have a fantastic program that's ending in a few days where they're going to be giving you 2 stocks valued up to $1,600 when you deposit $100. Just go ahead and grab this free money. Sell the stocks if you want, who cares? Then use that money as a down payment on a real estate purchase. You know, honestly, the fact is, tax laws are written to reward investors that purchase old buildings, hire workers to fix them up, and then rent them out to good people at affordable rates. Over the years, our lawmakers have purposefully written these laws to allow real estate investors to take write-offs. And Trump is honestly only using these laws to his advantage that have been on the books for a very long time, including one that was added during the Obama years that allowed him to double up some of his deductions. Is it possible that Trump took more write-offs than he was entitled to? Well, that is not something that I have any of the facts for or against. Neither do CNN or MSNBC, or any of the other partisan news outlets that are just completely foaming at the mouth trying to hit Trump with yet another made-up scandal. And I can say this 100% non-biased. I only care about the truth here and how it applies to finances. And I don't really care which political party was involved. I would say the exact same thing if this was talking about Biden. I don't care who the person is. Now you are armed with this knowledge, and I hope that it has sparked your interest in investing in real estate. If you would like to learn more, you should check out one of my previous videos where I showed how I purchased a 7-plex multifamily apartment building with no money down, and I was actually paid $10,000 at closing just for arranging the deal. Thank you very much for watching. Please make sure you click like and subscribe. Doing so really helps with the YouTube algorithm, and it's something that I appreciate. Thanks, and I'll see you on the next one.